So this is part two of our continued conversation with our mortgage advisor, which we're really delving into everything you need to know as a foreign buyer. So if you haven't checked out video one, make sure you check that out. But now here's video two, and we're going to finish that conversation. From an amortization perspective, are you seeing that you can do interest only versus principal and interest repayments? Where do banks sit on that for clients?
So interest only is definitely available to a lot of buyers. It's the norm when it's a buy to let, when it's a rental property. Okay. So this is really absolutely the normal way of doing it. And it's easier to get interest-only mortgages if it's a rental property, where the ultimate repayment of that loan in, say, 20 or 30 years is that they will sell that property, and that's accepted by all of the lenders. When it's your own home, it's different. So it's a little bit more. You need to really have a secure way that you can pay that mortgage back if it's interest only. Yeah. So it may be that you decide to sell, you plan to sell the property. And if you have enough of a deposit, of a down payment, right, then that way of repaying, to say, well, I'll just sell it in 20 years, that's okay. You have to have enough equity that it makes sense that you would be able to sell it and pay that off, even if the property market would go down and it's worth less than it was when you bought it. You just need to, it's usually about 50%. If you have a 50% down payment and you're borrowing half of the value on day one, then it's usually accepted that you're pretty safe to, have to sell it to pay it off. But with interest only is available to that 75% mark. But you do have to have other assets. So it could be other real estate, it could be investments globally. A way that you could pay that mortgage off on your London home or UK home without having to sell it, without being forced to sell it. The banks don't want to be in a position where they're basically kicking you out of your home to pay that mortgage off at the end of the term. You should have another way to do it. And then there's a third way, is where we do a bit of a hybrid. So we might say, well, we'll do some of the mortgage interest only, which keeps the cash flow down, outgoings down. But then we'll do the rest of that mortgage on an amortizing or repayment basis, so that you're getting it down to that 50% naturally every month by the end of the term, but that you don't have to put the whole thing on a repayment basis, which it doesn't work for some people. Depends on their cash flows. So the classic one is people who have lumpy incomes, so they don't just have a salary, but they have bonuses every year, or they have a self-employed income that isn't so regular every month. Then interest only can work a bit better for those people, because every month the payment is a lot less, and then they can choose when they chip away at that debt.
Got it. Okay. So again, that's going to be a big difference, because again, my properties in America all are on 30-year fixed mortgages, paying down principal and amortization. So as a buy-to-let investor, then again, that's one of the things I help clients is really, let's have that discipline. So, are you setting enough cash flow aside, particularly to, if you don't plan to sell it, right? If you plan to hold those investments for a while. So is a repayment mortgage an option for a buy-to-let mortgage investor?
Oh, yes, it is an option, and the banks are willing to do that, as long as they feel that larger monthly payment is serviceable.
It's still
by rent.
Yeah, okay.
Because it's a higher payment. So then they'll say, well, are you able to, is that going to be okay for you given the rent you're going to be getting?
Right.
And or your own income that you can be feeding into that if you didn't have a tenant for a few months or something.
Right. And then I think just in terms of the practical time frame on the due diligence side, how long is it typically taking for mortgages to get put through? And I know it keeps shifting. Obviously, we had a big glut of properties because of the stamp duty holiday. So see a lot of people trying to push through things right now. The banks are inundated. We're all working from home. So how long, generally speaking, and again, I like my clients to have, the conversation with you first before we start searching. So how long does it take, and how good is that approval, if you will, if someone's searching?
So then it sort of depends on the client's circumstances and how organized we are on the documents. So if I can gather up all the documents around income, assets, spending, bank statements, everything in one place, and I can make a solid proposal to a bank, I can usually have that assessed within 1 to 2 weeks, where they will say to me, yes, we're likely to do this mortgage, and the numbers stack up.
And that's when we would then get that mortgage in principle that we typically need to go out looking.
So that's what we say is an approval in principle, subject to the appraisal or the value. In the UK, we say the valuation of the property. So the next step after that is the valuation, which usually takes 1 or 2 weeks for the bank to, find someone to do it, hire that valuer. The valuer has to then call you, Ugo, or the estate agent selling, to make a time to go and see the property. So this process, and then they write the report, send it back to the bank, takes another week or two. So on average, I always say that a straightforward mortgage case should take about 4 to 6 weeks from when I first have everything I need to the final approval, which in the UK we say it's when it's offered. So this is when a binding offer goes out to the lawyer. And that's really, the final approval. Now, one caveat I would give is if you have someone who is a little bit more complicated in how they made their money, or they want to borrow a lot of money, so millions of pounds, then we have an additional hurdle, which is called KYC, know your client. And this is, Microscope is really, strong on this. And we have then another presentation in addition to can they afford this mortgage is, how did they make their money? And we need to the onus is on me to prove that that was done in a way that was legal and, doesn't have any aggressive tax planning involved and things like that. Because now these private banks have evolved to really being required to put people through their paces to prove that source of wealth. And that can sometimes take longer than it takes for them to decide to give you a mortgage. So we really have to see what kind of deal are we looking at, and then to, manage those expectations on when we're going to have the mortgage approved and the client, we say onboarded, which means that they're happy to deal with that client philosophically.
So again, I think the most efficient way to be doing this is you can get a lot of that front end work done, get that mortgage in principle. So again, from an underwriting perspective, kind of the outline of the person is acceptable, and you have actually found a bank willing to lend, subject to the valuations, subject to finding the right property. I then get involved as their buying agent. We help them find that property. Once we're under offer, that's when simultaneously the legal due diligence is happening, right? And you're working with the bank to finish the underwriting and the valuation side of things to deliver that offer. And it's when that offer is complete and available, along with all the due diligence, all the conveyancing side, that's when we can now exchange contract. Is that right?
That's exactly, that's exactly right. So I would say that it's really important that clients would come to us before they are under offer to buy a place.
Oh, absolutely.
So if you have someone who comes to me and says, well, we've already agreed to buy this place for £1 million and they want us to sign the contracts next week, we don't have time to deal with that. But they may be able to pull that off as a cash buyer. But not if we're getting a mortgage. So the best is to, kind of make the plans beforehand. Let us do all of the work, make sure we've got that really solid. We know where we're going to go with that mortgage, and it's going to happen. That's and right. We have all the paperwork. Sometimes banks ask for things later on, which the client needs time to get. So yeah, just really good to kind of do the due diligence before they start looking.
And manage expectations. So so for me, typically they're coming to me ready to go, super excited. I then typically will introduce them to you. You then assess their finance situation. And then if they're, are serious and looking for that mortgage option, doing that onboarding and finding the right lender. And then we can start looking. So it's really important people understand that is probably the process. So while you kind of estimated 4 to 6 weeks, I probably say if, probably budget. And again, that's with the cleanest profile. So if not, probably closer to 12 weeks, perhaps, so if that's what it takes. But, hopefully we've done our job finding you the right offer and situations, so that typically it is taking about 3 months, anywhere from, maybe 8 to 12 weeks, right? But 2 things are happening at the same time: the legal due diligence, conveyancing, along with the bank financing from exchange of contract. And just finally, finish off that last bit. What is the difference between exchange of contract and completion? What does a bank need to do during that interim? Is there anything fundamentally kind of still happening?
Oh, that's one of the kind of the weird aspects of the property buying process, legally speaking, in England and Wales. Interestingly, not in Scotland. But in England and Wales, we have a system where anyone can back out before this magic day, which we call the exchange of contracts. Right. And that's usually done in America and most countries at the beginning. Correct. So, you sign the contract and then, you can only back out if you have a good reason, which is in the contract, like the appraisal didn't, wasn't as you expected, or you couldn't get the mortgage or something. But here, no. So once you've exchanged contracts, it's basically just down to the lawyers on both sides to get their ducks in a row and to make sure that the money will get to them on the closing day. We say closing day is completion day in the UK. Right. So there's not that much that happens between exchange and completion, apart from the lawyers making sure that the money will get to the seller on that day. Okay.
So from a bank's perspective, in essence, they're kind of finished as well. And it's just almost just a moving of money, able to get it to the, the buyer solicitor, funds are held, and then completion then happens.
Yeah, that's right. So all of that due diligence has to be done before this exchange of contracts. So for example, in my world, the mortgage world, my client's lawyer, the buyer's lawyer, will get the mortgage documents, like we said, maybe 4 to 12 weeks after we've started talking to them. Part of what the lawyer does is to look through all those mortgage conditions and make sure that they will be able to meet all the conditions on when they want the money. So that has to be done prior to exchange. If there was a mortgage condition that the lawyer feels he or she can't meet, then that's a problem, because he won't be able to get the money on the day of closing. Right. So all of this heavy lifting gets done prior to exchange of contracts, and that's why you have all that time after you've found the property before you're in a position to really sign the contract.
Right. Yeah, and be legally bound and paying, putting some serious money into it. Yes. All right. So I guess that kind of concludes our conversation. You've been so helpful. You've shared so much. I think this has been really insightful. I really appreciate you coming on. Any final thoughts overall about the state of the market, or kind of what you might be seeing or anticipating with 2021? We're formally out of the European Union now. Brexit has happened. Anything in particular? Is that giving you fewer lenders now? Has anything kind of changed, or what do you kind of see for the rest of the year?
So as I said earlier, the market is sort of stabilizing for lending and mortgages. So I don't see a huge amount changing. The trends that we see now are that as far as people willing to lend, that's continuing to kind of loosen up a little bit. as people feel better about the pandemic coming to an end and the market stabilizing,
right,
and you know, people's jobs being a bit more secure and things like that. Interest rates, that's another thing people ask me about a lot.
sure.
So as we've both been talking about in this program, you know, we're at record low rates, and I think that we will see fixed rates going up in the next few months. So let's say Q2, Q3 of 2021. And that's because fixed rates in the UK are based on what the market expects interest rates to do years from now. So we just saw, you know, with good news about the UK's vaccine rollout, for example, was seen by the market as very good news for this country.
Yes.
Pushed up the swap rates, the long-term money market rates, and we're seeing fixed rates are going to go up now. Okay. So I think that we'll see mortgages becoming a little bit more expensive. That can change if things change, and you know, if we had some issue with the pandemic, or it looked like it would be more prolonged, more lockdowns, then we'd probably see rates come down a little bit. Property market, it's really interesting because it's become really a two-gear property market in London and in the rest of the UK. And it really depends on, you know, what type of property is that? Yeah. The whole thing that everyone talks about, where everybody wants a bigger house and a bigger garden or yard or whatever, is real. It really is. That I have lots of clients who are buying country houses. They're buying, you know, bigger places in London, and so the price of a house of a certain size with a good outside space, really strong. I'm sure you're seeing this too. Mm-hmm. And then if you have small flats or apartments, you know, with no outside space, sure, in the middle of London, that people used to pay to buy a little because it was close to work or something. You know, these are suffering. And and if you're an investor, actually, it might be something to look at these prices and say, is that a bargain? The other thing that we have to keep an eye on when you're an American buyer is the exchange rate. Sure. So the pound really is, you know, lately has become quite strong against the dollar. Yeah. So this is something that people should think about too. If you have US dollars that you're going to be bringing in here for your deposit, you're going to be buying pounds. So you might want to talk to your foreign exchange broker or your bank about a forward rate. Yeah, no, thank you for mentioning that. Actually, I think it's on one of my latest videos when it's the topic is 5 questions every foreign buyer should be asking. And one of them is exchange rates, because we do focus so much on interest rates and the price of a property. But I would argue that actually exchange rates will ultimately impact what comes out of your pocket more than anything else, right? So post-Brexit, we saw a 20% or 30% reduction in the value of the pound relative to the dollar. So that was instantly a savings of 25 to 30%, and you've done nothing, right? And conversely, yes, now that the dollar is getting weaker relative to the pound, it's going to cost you more. I think we saw a spike in March of last year, and now slowly but surely the pound is strengthening relative to the dollar, and that is going to impact foreign buyers trying to move money over. So you do need to be timing and factoring that. It's probably going to go back to its base norm, right? Historical norm. So important factors. So I think we'll conclude it here, but this has been so very helpful. Again, Ian Gray of Kinnison Limited, we want to thank you. If anybody is interested in connecting with Ian, by all means, get in touch with me. Drop me a note in this video. We'll definitely introduce you. But really appreciate your perspective and just love having you as a partner to support me and my clients, and look forward to just working together more in the future. Likewise. Thanks very much, Ugo. Thank you. See you guys. Thank you.
Thanks so much for watching. Make sure to check out the other videos on my YouTube channel where I share great things about the London property market and living in this incredible city. So that's Ugo Arenze with Onyx Property Team and Keller Williams. Bye for now.